Hi everyone, welcome back to my YouTube channel. This is AmberFX. Today we want to look at the weekly review. What we'll be looking at this week to trade in the currency pair. So the first thing we want to check, let's check out the fundamental that play out last week and check out the one that is going to play out this week. Last week, the crucial one we see here last week is the US CPI, which came out on Monday. Last week on Wednesday, sorry. Last week I talked about waiting for the CPI to play out before you can know your next move in USD pair. So on Wednesday it came out and it's disappointing, and we saw the lower than expected. Instead of 0.2 forecast by the by the market, we have 0.0%, which is a disappointing one. Instead of 0.5% forecast, we saw 0.3% play out right there. And the funniest thing is that if we check the previous one is so high compared to the released and compared to the forecast. So which tell us that we saw US dollar as the last loser last week. Is the best loser last week of all the currency pairs, starting from Wednesday. After that, another disappointing one is the PPI, which comes out on Thursday, a day after we have the CPI. That one too, we have this disappointing PPI too. The PPI monthly, in month of, so we have 0.2% instead of 0.4 forecast, and the previous is 0.4, which make the US dollar to be the weakest currency last week. So and after then on Friday we saw the GDP, the pounds GDP, in as much as the result is higher than expected, and I don't think it has much impact as to say in the economy, because we already have we already have Britain in recession. So the British are in recession now, so it's already confirmed. Maybe from this time till next year, I don't know we are going to get out when they are going to get out of it. So this week, let's check out the fundamental that will play out this week. Starting from Monday, Tuesday. Okay, on Tuesday we have AUD policy meeting. This is just a meeting that, but you have to be very careful there, because they might say something that will have an impact in the market in terms of Australian dollar. So on Tuesday we have Canadian dollar CPI. We just have the previous one, no forecast yet, so look forward to that too. So on Wednesday, the crucial one is on Wednesday. The very important one is on Wednesday. We have New Zealand dollar cash rate, that's monetary policy rate statement, and then interest rate on Wednesday. So from Monday, Tuesday, we might not see that kind of big movement in New Zealand. We might start seeing the movement on Wednesday after the release of the interest rate, because markets will try to calm for the news to release before it becomes because it before it explodes or do the actual movement. And then because last week there's something that happened in the market that I'm not aware of. If maybe you know the reason why New Zealand dollar came out strong after the release of US PPI and the CPI, because US is the best loser last week, but I think New Zealand dollar is the strongest currency last week. But I'm looking for a way to check why. Why is it most strongest currency pair elastic, but I can't seems to find out. But I think if you have the answer, you can drop the uh, answer why it's strong. So, and on the same day, on Wednesday, we have USDI, the retail sales um, on Wednesday too. And then at the same time, 7 p.m. On Wednesday, that's GMT -1. FOMC meeting on Wednesday, 7 p.m. And on Thursday too, we have Australian dollar employment change and unemployment rate. That one is very, very important. We are looking forward to that too. So I think that's the fundamentals to look at for this particular week. So going to technical analysis, the DXY. So what's happening in DSY? Let's check out what is happening in DSY. So like this now, I think we have a break of this particular trend line at this area. If you check it, we have a break of the trend line, and then not really break because we might see a rejection at this particular area though. So you can say it's breaking, and this particular area might hold our support. It might be a fake breakout, we don't know, because if you check very, very well, you can see a rejection candle at this particular area, but we don't know what will happen uh, this week. Maybe it will break more to the downside, and we have the next target at this particular area, or it will just what? It will just breaking back and then keep moving to the upside. So we don't know what's going to happen there. So anything that's happened, it will really determine the strength or weakness of US dollar. So for the first pair we are going to check is the Euro USD. If you check on this pair, if you take a look at this pair very well, we can see that we are still in the long-term downtrend. The downtrend is still very, very visible to us. Even checking the daily time frame, this is the daily time frame right here. You can see that it's going a series of lower high and lower low, which we might see a break to the downside at this particular area. And if we use the trend line, we can see that after breaking out of this particular what is it called, of this range, as you can see, this is a range. It range there for like let's count the number of days: 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16 17 18 18th day it break out, and then before you know it, we saw a rejection at this place. Don't forget that this place is a very very strong resistant level. So rejection there, it's not something that should be a thing of surprise. But for me, my own bias on this pair is to the downside. On Euro USD, my bias is to the downside. Always trade what you see, not what you think. So this is what I see. I see that we have a 2 week rejection uh, candle here on a daily time frame, and we have the close of the bearish of a bearish candle. So um, I'm selling at this particular area, and my first take profit target is 0. The low at this area, that's 0.99450, and then I'm targeting another low, which is maybe 0.9800. That is yeah. So this is another low I'm targeting at this particular area. So that's that about Euro USD. So the next one is the next pair to look at is Euro JPY. If you check this Euro JPY very well, and you can see that we have some kind of bearish momentum want to enter at this particular area. After a breakout of this level, if you see this level, this is the level I'm talking about. And this particular level again, after breaking out of this level, we have a breaking which reject at this particular area. So let me use the one that is very very near to it. You know, we have a level here, and then we have some supply level at this particular area. So then we have a rejection at this area. The rejection gives us a very very clear and then a big bear rejection candle. As you can see, if you check this thing very well, you know that this is this is a reversal candlestick and is a bearish engulfing candle if you check it very well. And then we want to have a bullish momentum here, but it does not work, does not last, which we are a small hammer candle at this particular area. So apart from that, uh let me delete this. So apart from that, if you go to the 4 hour time frame, I think we should see something at 4 hour time frame. Oh, I will see something right there. If you look at this level, you see something like head and shoulder at this level. This is the first shoulder, this is the head, and then this is the second shoulder. So this should be our neckline. So what we are looking at is, if you see a breakout of this level and a small retracement, we should see a drop to this particular low coming to this week. So my bias is bearish on euro JPY at this moment. So the first target is 133 to 60, the first low, and the second target, if you see a breakout of this low, then we should target 125074. So the next pair I'm looking at is DBP JPY, that's pounds JPY. So like we said, pounds, the British are in recession, so it's might come out to play at this particular area too. So my bias remain bearish on pounds JPY because there is a breakout of this area. We have a retest which reject at this particular resistance level too. Then we now saw a breakout here. Then we should be looking for our targets at 156,900. So any retracement you see to this particular area is an opportunity for you to what? Any retracement you see to this area is an opportunity for you to what? To look for a bearish setup. So the next thing I'm looking at is New Zealand dollar, US dollar. As you can see, we have a head and shoulder at this particular area. As you can see, a big one, and then what do we have here? We have a breakout of the head and shoulder, and then on Wednesday we have a New Zealand dollar interest rate coming out to play. So on Monday, Tuesday, we might see something like a move to what? A move to this particular area in SND pair. So after that, we might see a sharp move to the what? To the upside. So any retracement you see to the downside is an opportunity for you to what? To look for a bullish setup in what? In New Zealand dollar, US dollar. So the next pair I'm looking at is New Zealand dollar, Canadian dollar. Same thing might play out here too. Talking about the interest rate that is going to come out on Wednesday. So at this area we can see that it has hit a resistance level to at this particular area. So this might tell us that we might see a rejection down to this particular area before we see a movement to the upside, or before we see a break of the what, a break of the particular resistance. So we might see something like this from Monday to what, to Wednesday. We might see something to the downside like this, then we might see a break, what, a break to the upside, which we target this particular level, this particular high. So any adjustment you see to the downside is an opportunity for you to what, to look for a bullish, or for a what, for a bullish setup, because last week we saw a break of this particular resistance level, then we might see a small retracement to the downside, then we now see a move to the what, to the upside. So the next one is Canadian dollar Swiss franc. If you check the higher time frame, you see the breakout of that particular level at that area. Okay, I've marked the level already. As you can see, we have a breakout of this level. So this level too, if you check the higher time frame, this should tell you that if it's not that visible, you should know that I think this is not even thing. This is a short pattern right here, playing out in a higher time frame. Then we saw the neckline at this particular area. The neckline has been what? The neckline has been broken. Neckline has broken. So anything that you want to do here should be for a bearish setup. Then if your own bias is bullish, then you can wait for the break of for the breaking of this particular area, or you can wait for the break of 0.7605 if your bias is what, is bullish. But for now, the main sentiment still remains bearish. So what I'm looking at is any retracement I see here in maybe 4-hour time frame, then is an opportunity for me to look for a bearish setup. My target is in 0.71857. This is my target. So I'm looking forward to short card chef and take my profit at 0.71857. So the next pair we are looking at is pounds Canadian dollar. I should say that the British are now in recession, so you can just take this as a little burger to spice up your new week. So after we have a breakout of this level, as you can see, this is a very strong support level which has been broken at this particular area. So maybe on Monday we might see a move to 54154. Then if you check the higher time frame, I think there should be a free fall at that particular area. So the next low should be the next low is 1.49733, and after that we have a free fall. So you can take your profits. If there's a break of this level, if you don't know where to go, then we started using the even numbers as your take profit. So the last one I want to check at this particular area is if I'm to talk about fundamental here, then we might say that we should go long. But according to the philosophy which says, can I call it philosophy? It says by some book I read that said trade what you see, not what you think. So if you are to trade of what we think here, we should be like, okay, we should see a breakout of this area. But if you are to trade based on what we see, then we should be ready to go short at this particular area, because at this trend line we saw a rejection which give us a big hammer candle. There is what it's at this area to sell rejection, this area to sell. But one of my observation here is that this particular rejection candle is not as big as this, so which tells us that we should wait for a candle to close below this particular rejection candle, maybe Monday candle to close, then we should now decide maybe we are to go short or to wait for the breakout of this particular area. So that's my analysis for this week. For those that have been subscribing for this to this YouTube channel, because I say a very big thank you to you. Please share this to your friends, to your lovers, so that they can know what's going on in the financial market, what's going on in the forex market. And then if you are a new if you are a new if you are new to this channel, please do well to click the bell button, subscribe, like, and share.